So it seems at the moment, with interest rates going up, that you cannot mention the interest rate rises without a boomer coming along and telling us that things aren't as bad as they were in the 70s. So what I thought it would be interesting to do in this video is to actually do a comparison. Let's look at the raw stats. Let's see what happened in 1979. Let's compare that to what is happening now. And let's see who had it worse. Now, I know this video is going to be slightly divisive, so apologies for that in advance, and also apologies to any boomers that maybe were offended by that intro. Also, my neighbours have tradesmen working in the back garden at the moment, so apologies in advance if you hear any machinery, radios, or swearing going on throughout this video. So what I've done is I've put together a spreadsheet, which is going to allow us to compare all of the key figures and hopefully work out who had it worse. So you've got the things here that I'm going to be looking at. So the first thing we need to know is what was the average house price in 1979 and what is the average house price at the moment in 2022. So this website here is the land registry. So the data on here is about as accurate as you're going to get. So this graph shows the house prices all the way back from 1970. And we're going to go to November 1979 because that is when interest rates peaked. And I'm going to show you that in a moment. So let's go and find November 1979. Now I know that text is quite small for you guys, but what it says is £18,542. So there's also the figure here, which is at the moment the most recent figure, which is for May 2022. So it's a couple of months behind, but we've got the average house price there at £283,496. So I'm going to go back to the spreadsheet. Now I've already entered both of these figures. So I'm just going to actually change the color of the text so you guys can see these populated. So I've got 5 examples here that I want to go through. It'll make sense as we progress through the video, but you've got the year 1979 average house price, year 2022, and the average house price. The next thing we need to know is the average salary for those years. So let's go back to the browser, and I've got the full-time salary here for 2022, actually shows 2021. Now, I'm not sure how accurate this is, but from the figures I've seen across a number of different websites, this seems about right, you know, around about the £30,000 mark. So this shows with 2021 at 31,285. So that's the figure I'm going to use. And the one from 1979 was actually a Freedom of Information request. So I followed this through and this allowed me to download a PDF. So I'm just going to bring up this PDF now because the data was tracked slightly differently back then. They've got these scanned in data sheets which show the information hopefully we're going to use for this video. So we had a choice between April 1979 or April 1980. So I've gone with April 1980 as I felt that was closer to the actual time zone that we're looking at. And if we scroll down, they've got the data broken down by both male and female and also the types of work that they were doing. The most accurate figure I could find, I think, is on this page here. So I'm going to take all full-time males because back then, generally, the male was the main income for the household. And obviously things have changed now, and this isn't about male versus female. I'm just trying to give you the best data I can for this comparison. So all full-time males for all ages, the median salary here, or sorry, I say salary, it was weekly pay back then. So the median weekly pay was £109.50. So if we do £109.50 times by 52, that's £5,694 per year approximately. That was the median salary. But let's go and pop this into the spreadsheet. So we've got the average salaries here for both 1979 and for 2022. And I'm just going to divide all of those by 12 so you get the monthly figure. So people were earning on average £475 per month. And at the moment we're earning on average £2,607 per month. So the next column, I've got the mortgage. So to make this fair, what I'm doing is taking the average house price and just applying for a 75% mortgage. So assuming that people have a 25% deposit. Now, whether that's accurate or not is irrelevant, but it's all we need to do this direct comparison. So approximately a 75% mortgage on that is 13,907, and a 75% mortgage on 283,000 is 212,000. So this is where things get interesting. This is the interest rate. This is what all of the division is about at the moment, about what should be happening with interest rates and how high they were in the past versus how low they are at the moment, and how we've never had it so good. So let's see what this actually means in terms of mortgage payments, and then what that then means as percentage of monthly pay, because this is the most important figure. This is what's going to give us a true reflection of how much it actually costs to own a house now versus what it used to cost back in 1979. So I'm going to go back to the browser here and see if I can find the interest rate history graph. So this shows interest rates all the way back to 1975. And the peak came, as I mentioned earlier in the video there, November the 15th, 1979. That's when interest rates hit 17%, which I think it's hard for anyone like myself who, has had a house for, well, how long have I had a house now? Coming up 15 years. And I've never seen interest rates above kind of 5 or 6%. So to see them at 17%, yeah, it does look really bad on paper. There's no doubt about that. And I'm sure things were very tough at that time. So 17%. And at the moment, we're at 1.25%. There is, I'll get it to click over properly. There we go, 1.25%, expecting that to go up again this month. So let's go and pop this in. We've got 17% interest rate. And for comparison purposes, we're also going to try 17% based on the current figures to see how crazy things would get. So to do the monthly payment calculator, I'm going to go back to Google as they've got a built-in calculator we can use. So let's populate these figures accordingly. So we know we have a mortgage of £13,907. So 13,907. We know the interest rates peaked at 17%. And let's say the average mortgage period is 25 years. So that is a £200 per month payment. So let's go and populate that there. Now let's do the same thing for the average house price at the moment. So we need £212,622. So 212,622. 212,622. So that gives us a monthly payment of £3,057. So let's go and pop that into the spreadsheet here. It's £3,057. So as a percentage of the monthly pay, this is what we're going to get. If interest rates were at 17% at the moment, your mortgage monthly payment would be over 100% of your salary. So you would be in debt trying to make your mortgage payment. Whereas back then it got to 42% of the salary, which is still extremely high, 42% of your salary just going on mortgage payments alone. But for comparison purposes, let's see how things would compare based on the current modern mortgage. So at the moment, the current modern rates are, if we go to compare the market, this is for a 5-year mortgage. I've based this on a property of £260,000 with a £65,000 deposit, because that gives you a 75% loan to value ratio. And approximately the interest rate we'd be looking at for a big brand, so a brand people actually recognize, is about 3.3%. So let's do a comparison of back then. If we do these at 3.3% and these at 3.3%, let's go and get these monthly payments and see how they compare. So I'm going to do this one first because we've already got the data entered into it. So I'm just going to change the interest rate first to 3.3%. So that gives us a monthly payment of £1,042. So we'll pop there in at £1,042. And if we go back and put in the 13,907 again, so 13,907, that is £68. So let's put £68 there. And then if we do the comparison again on the percentage of your monthly pay, back then it would only cost you 14% of your monthly pay. At the moment, it's still the best part of 40%. So at the moment, the current rates, you could argue, are comparable to what people were paying at the peak at 17% back in 1979, based on the figures that I've used, of course. And I'm sure there are some people saying, well, interest rates at the moment, these were based on the Bank of England base rate, so we should really base it on the Bank of England base rate at the moment, which is 1.25%. So if we did that, the mortgage monthly payment would be £826, and as a percentage of your monthly pay, it would be 31.68%. So that is how things compare now in 2022, real world house prices and salaries versus the real world house prices and salaries of 1979. You could argue that things are as bad now almost as they were when things hit 17%, based on the fact house prices have gone up so much, and as a percentage of your monthly pay, you're using almost the same amount to pay your mortgage. So that's the video. Hopefully you guys found it helpful. If you did, if you could hit that like button, that would be hugely appreciated. If you want to see more from me, subscribe to the channel. And what I'm going to do now is pop up a video in front of me showing you guys why I'm worried that house prices are about to crash, and I recommend you guys give that a watch.